Welcome to the market recap presented by Tackle Trading. Get in the game.
Good afternoon, Tackle Traders, and hello, YouTube. This is Frank coming to you with the market recap. It is Monday. It is the 8th. My computer did its best to end the streak of not revolting on me. I'm crossing my fingers, and hopefully it is not going to. So hello, Majid. Hello, Em. Hello, Marcelo. Good to see you guys. As always, hope you had a great day in and out of the market. I was doing great until about 2 o'clock in Utah, and decided to give a quick restart to my computer, which ended up being a mistake in hindsight, as it really had a hard time waking up. It did not get the memo that we had stuff to do, but it looks like we're going now, so I'll take the win. So great to see you guys as always. I hope y'all had a great weekend and are ready to pick right back up where we left off. So jumping right into it, not much on the earnings front going into tomorrow. No big name companies, no S&P 500 companies. Just keep in mind, we do have a couple of the big banks like Wells Fargo and JP Morgan at the end of the week that'll kind of officially maybe, or at least unofficially, get this earnings season underway. But we will catch them as the week progresses. This morning, you saw some selling in the futures market, a nice little gap down on the open and on the S&P 500, and then a lot of resiliency throughout the course of the day. We ended up closing pretty flat, not a huge win by any stretch of the imagination, but it does continue to show us that there is a lot of resiliency going on in the market right now. Bulls are, they're all right jumping into things. They don't need many excuses. So we are knocking on the door of that 2,900 over on the S&P 500. S&P 500 again above everything. Closed our breakout yet again. We're working into some, pretty high territory, right? 29 is 29 to 29.20 is kind of where I have the next level of resistance, which is going to line us up with this old high here, along with that nice round number. So we are a little bit extended to the upside right now. And of course, this was true, on Friday as well. I still anticipate, at some point we are going to need a little bit of a bullish retracement from a broader market perspective, but certainly not here today. And hi, Patricia, great to see you. I hope you are doing well. So just continue. Let's watch and see how we operate at this 29. Again, it's not a huge level of resistance. I'll look at these tops up here at 29.40 as kind of, those are, well, that's as high as we've been, right? So those are definitely going to be ones we want to keep an eye on. In this little area, I wouldn't be surprised if it does, create some profit taking, but, it's could have made the same case, certainly on Friday, and at least here today, traders were willing to buy back in off of a little bit of a gap. Certainly not a major gap on the open, but certainly it was a gap, and traders were really quick to jump right back into it. So still above everything. I'm going to be looking at this old 28.50 to 60 zone as my primary, or first level at least of support. But from a pure trending perspective, really here's our swing high. So, if we wanted to pull back way down into the 28.30s, that wouldn't be a bad thing necessarily by any stretch of the imagination. So we will see where this one takes us as the week progresses. Really same situation over on the NASDAQ, knocking on the door, closing just a hair below 7,600 here today. And just as it continues to just be the place, I guess, to be amongst places to be this last week and a half in the market. We are approaching these highs. And again, we're not there yet. We have a little bit of room, but I would expect as we approach these, all-time highs, there would be a profit-taking zone. That's where my head will be if I'm around when that's happening. I'm sure I can't imagine I'm the only one. A little bit of room to go until we get into that 76, 80 to 90 range. So we got a little bit of room, showing a ton of momentum, well above everything. The short-term moving average is at 9 is starting to pull away from even that 20 moving average. So we are seeing lots of momentum, a little bit extended to the upside is my only, short-term concern, I guess, in the NASDAQ. Over in the Dow, not nearly as exciting, but we were able to hold our breakout point, which I think is probably the most important thing from a purely technical perspective. I don't think if it fails this, it's a bearish signal, but I do think as long as we can hold this, it is a pretty bullish signal. So it closing above it, I do think if nothing else, it's a little bit of a short term or a little win for the bulls. Testing that old breakout point, can't really complain about that by any means. You had, Boeing gap down on the open, putting some early pressure on the Dow, but able to hold its own pretty well here today. Good afternoon, Maurice. Good to see you. I hope you're doing well, my friend. So really not a whole lot different today than Friday. As you can see, we did see a little bit of stalling in the rut, but I think a little bit is where we have to let it end because we didn't even take out, Friday's low here today. So, while there may have been a little bit more, than we've been accustomed to in the rut as of late, certainly far from a bearish candle, far from any bearish confirmation or anything like that. A little bit of red, a little bit of selling. 16 still is the number. Actually for me it's 1605 where the number is, but the 16 area is kind of that next level of resistance to be keeping an eye out for, I think, within the Russell. And I think most traders I've been talking to tend to agree with me on that side of things. And hey, Whitney and hi, Marie, good to see you guys. I hope you had a great weekend. So really just a little bit more of the same as we get ready to head into earnings. We are a little bit extended, I think, as of right now. Doesn't mean we have to pull back. Unfortunately, I wish it did, then we could just reset all over again, and I would be perfectly okay with that. But we are a little bit extended to the upside right now in a lot of these different areas. And absolutely, Whitney, it was a strong day. It could have been easy. And, you see this, and this is why the power of the trend is so important. We had that gap on the open, and it could have been easy to want to get out. And instead, traders are getting right back in, so, there's still a lot of believers out there from a bullish perspective right now. We're approaching in the S&P, on the NASDAQ, and even on the RUT now, approaching some pretty, heavy resistance. We got a little ways to go before we get there in those three indexes, but definitely something we want to keep in the back of our mind as we get closer and closer to them. I think is how we should be going about it. And yeah, I would like to pull back to Whitney, and we'll get one. We'll get one, and then we'll complain because it happens in one day or something, right? That's how we are as traders. Really held our own over in the material sector. It definitely is, to me at least, extended to the upside. Doesn't mean anything's wrong with it. I mean, that was just a heck of a run from support through resistance. I'm really liking this little consolidation that we've had. I know it's only a couple of days, but we have to start with a couple of days, right? And so a consolidation can really do the same thing as the pullback. Maybe our eyes prefer a pullback, 3 days down, doji, 1 day up type of a deal. And that's okay if that's what we prefer. But really a consolidation period, at least in my opinion, does the same job. We are holding that breakout. Really for me, though, the primary support level is going to be this, line in the sand, if you will, is going to be that 5640, this old breakout that we watched for what seemed like forever to finally break through. And of course, been pretty good times ever since in this sector. So lots of room. I really do expect that this is one of those areas that I will continue to like from a bullish point of view going into through the month of April. Ask me if it breaks 56, maybe that will change my my opinion. But as of the way the chart looks right now, again, much like so many other pockets of the market, a little bit overextended. That's about all the negative that we can say about it from a technical point of view. We were able to continue our run in the energy sector. We, of course, broke out on Friday and really some pretty good follow through here today. Now, we did come off of the intraday highs, and this is one of those patterns within energy. We're just going to have to deal with it. We've got a 200-day moving average that's going to be kind of hanging around us. We've got this old 69 area, which was, it's top of its range back last spring when it was doing the same back and forth dance. I expect, much like last week, I wanted to see some follow through. Overall, I think this is a nice bullish signal for this sector. I'll continue to, like this sector, probably going throughout the course of the month. Of course, as you guys know, we certainly have some seasonality on our side when it comes to energy. During the month of April, it does, have a tendency to perform holding that breakout is a very good first step in towards doing that. Going to be lots of little things. We're going to have to contend with the 200-day moving average. Have to respect it, right? Don't have to fear it, but I have to respect it. We're going to have to deal with this old pivot back here at about 70, just a little north of $70. We've got a pretty significant price history at around 72 from days gone by. So lots of little things. I'd call 72 a little bit more than a little. And you guys know me, I always, assume that 200 is going to be a profit-taking zone, especially the first test of it. I expect it to put up a good fight along the way throughout these areas, and I do honestly expect it to try to win those fights. If I had to just say, make a definitive statement and buy and then not look at energy again, I would probably feel like 72 is where I would try to go. Now, that's not my style, and thankfully I don't have to do that. And there probably will be some fights along the way, but I do like this. I do think this is a very good signal, as we talked about last week, and really even the several weeks leading into it. That was a signal that I was looking for. I do want it, would really like it to stay above these short-term moving averages, ideally, as above 67. Now, that might be asking a little too much. We'll have to wait and see, but that what would make me feel most comfortable. As long as we don't work back into this range, I'm going to feel probably pretty comfortable with this sector. I do think we can also look at this low that we did put in on Thursday as a little bit of a swing low for us to kind of, if we dip a little bit, if we pull back, as long as we stay above that, I think that I can be a little brave when it comes to this sector, because I do really like it and want to give it a little bit of room without going too crazy, because really, of course, that is not my style. Over in financials, it continues to battle. It continues to be less appealing to me than other areas. I mean, much like materials, it's extended to the upside, but unlike materials, it's got stuff above it. Materials, if I'm going to buy something that's extended, it's going to be something that looks like the material sector chart, simply because there isn't any resistance, or notable resistance right above us. And so, whereas on the financials, we are extended, it's fighting hard. I have to give it its due. It definitely is fighting hard, but it still hasn't won the battle of the 200. Even if it does, we have to come back into this 27 range to fight. Probably one of those areas that if it continues to fight and outperform my short-term expectations, that 3 weeks from now or 2 weeks from now, I say I really like a break above this resistance level. But right now, I'm very cautious. Of course, we talked a lot about those regional banks. They are, the number one thing to be cautious about in my mind within this sector. But overall, I still believe from a bullish perspective, there's plenty of other sectors that are appealing to me, still shying away from the financials. Plus, we do have a lot of those banks, big banks and regional banks on the S&P 500 coming out either later this week or in the really relatively near future. So there's going to be a lot of earnings that can make this do a weird dance one way or the other. And it might not really impact the ETF tremendously unless you see something huge, but it certainly can impact the components and even the different industries within this sector. So I continue to be a little cautious, much like the other coaches here at Tackle Trading. We're a little bit, I don't think you can make a great bearish case for it, overall at least. Certain areas within it, sure you can, but it's hard to make a great bullish case. Over in industrials, we did have Boeing gap down on the open, putting a little bit of pressure. Of course, I think probably the bigger pressure was that 77 that we've been dealing with for a little bit now. Really solid resiliency, though. Really solid resiliency coming off of that low. Again, at resistance, gapping down on the open could have been easy, and maybe it still needs to do that. I mean, technically, we did put in a lower high and a lower low today, but it would have been, it could have been easy to let this sell off a little bit, maybe work back into that 75 and test that as a support zone. But we really saw, the resiliency of the market, the resiliency of the industrial sector in action here today. Not much has changed, and I do like the way that we have developed. As you guys know, I'm going to like the break above 77 as a bullish signal. That has pretty much been true all along the way, but I'm very happy that we've went into a bit of a consolidation period here after that huge gap, 3-4 days to get from support to resistance. That's a little too fast for me to want to jump in on the next day break. So I'm really appreciative of the way that we've basically held our own at a pretty significant, in my mind at least, level of resistance. I'd be happy with the break as early as tomorrow if it wants to give it. I feel like it's had an opportunity to kind of reset a little bit. If it does want to break, there is room to the upside in this area. We'll have to keep an eye on Boeing, but honestly, Boeing's not something I'm interested in one way or another right now. Too much noise, too many things can happen, that are completely out of the realm of the charts and just kind of out of nowhere events. So I'm not, interested in that. I am interested in the sector, and I do feel that we have room to the upside within the sector if and when we take out this 77. So I'm really liking that we're hanging around there, taking a little bit of a breather. Over in the tech sector, of course, we saw the strength of the NASDAQ here today, even more so of tech hitting a new high point here on the ETF. Really not a lot to say about tech. That it's basically kind of turning into a real estate and something that just doesn't ever want to seem to pull back too terribly dramatically. We are flying away from home, but we did just hit an all-time high in the ETF, and you can't really hit all-time highs if folks aren't pretty bullish on you. I don't think so, at least. Very extended, well away from our support, floating away from our moving averages. But again, this was much the case all of last week, or at least most of last week. Just continues to be a very strong sector. As long as the individual component chart is there, I'm fine with it. Would I really like a pullback in tech, maybe more so than other areas of the market? I would really like that. I would really like a pullback on tech into maybe 74, into this rising 20-day moving average, 74.50, something like that. I'm not going to hold my breath as to whether or not I'm going to get it. But I do think that would be, if I could paint the picture I wanted, I'd have a nice, slow, gradual sell-off all throughout the course of the week in the tech sector for us to, basically get in on a nice retracement early next week. But I don't know. That might be asking a little more than I hope for. So over in staples, had that nice pullback, had some upward movement on had the turnaround candle on Thursday, some nice upward movement on Friday, continuing that upward movement here today, as traders definitely were on board, at least as of the first few days. At least we're definitely on board getting into this sector from a pullback perspective. Really nice confirmation. I think we can call this swing support, which of course lines up with all of this other stuff around $55 to boot. So, beyond the nice movement, I do feel that we can call this a swing support level. I do feel we can say it shouldn't go below there now. That should be what props us up from a technical perspective. A little bit of resistance that we'll want to keep an eye on in the form of our swing high, but I'm not overly concerned with that. 56.50 and then 57 are going to be, much, in my mind, should be much bigger challenges. So I continue to like this area from a pullback perspective. See, there's pullbacks out there, Whitney, right? We just have to be willing to take them. So the folks who were willing to do that, at least so far, a few days into the bounce, are certainly probably happy that they did. And then there's utilities that if you got into the pullback, you're probably not as happy. You're probably not terribly angry, but you're probably not as happy. We still are holding our swing support level, which just so happens to coincide with that break of that all-time high, that big double top there. So 57, a very strong level of support, at least it should be in my mind. But like we talked last week, as we kind of started to fall below those averages, started to see that 9 go below that 20, just feels like it's going into maybe more of a little bit of a neutral range right now. And I don't think anything to happen today changes my opinion in that regard. I still believe with the way the chart looks, you have to be leaning to the bullish side versus the bearish side. Hasn't broke any support or anything along those lines. But it looks like there's a little bit of a turn out of it. Now, if we do see some, that broad market pullback, maybe that can get this sector kind of sparked as a defensive sector. Maybe that can get it going. But right now, just again, that pullback, I like my pullbacks to be orderly and not super deep. Don't get too terribly close to the previous swing. I know that's just a me thing. Not everybody agrees with that. Some traders like deeper pullbacks, and then there's really nothing wrong with them per se. But I like my pullbacks to be a little and a little prettier, I guess, if you will. We'll see where this one takes us. At the very least, I want to see a close back above these averages. That would be kind of the first step, and maybe could even be enough to make me, excited. I don't know if I'm all that interested in swing trading the utility sector, but that would be the first step. Right now, as long as we stay above 57, I do think at the very least you have to be neutral. I cannot see a strong bearish argument for the utility sector as long as we're holding that breakout point. And maybe we just need a little bit of time. That's okay. I mean, it's had a really good run. We can't be too unhappy with it taking a little bit of a timeout. Then you have healthcare, who just spends their entire life these days, at least in my world, in timeout, as it continues to have no idea what it wants to do with itself. I know Matt was kind of looking at the potential symmetrical triangle that it was putting together here today. I was noticing that too, but I am much like Matt in the regards to, there's me drawing lines live in person. That's one reason I usually have lines on here. I'm so terrible at drawing lines that just better to be safe than sorry, but kind of triangling a little bit here. I'm not particularly interested in a break one way or the other at this point in time, at least. But this certainly is a pattern that, my personal opinions, are certainly my own, and I'm welcome to them. But I know a lot of traders like to trade these type of patterns. A break to the upside, is interpreted, of course, as a buy signal. A break to the downside is a sell signal. Just think about it this way. If I'm bullish, I've got a leg to stand on. I say, hey, look, I've got an upward trend line, right? And you can't really say I'm wrong. I do have one, right? On the other side of it, if Emily says I'm bearish, I've got a downward trend line. Yeah, I might not agree with her, but she's right. She does have a trend line. And so if you kind of think about the psychology that if this breaks your trend line, well, now you don't have that anymore, right? Whereas my bullish trend line is still there, or vice versa. It breaks my bullish trend line. Well, M's is still there, mine is gone. So that's kind of the thought process behind these triangle type of patterns. Is there's an argument, both sides are legitimate until one of them gets taken away, right? So I'm not really a huge fan of this pattern, generally speaking. I'm not opposed to it by any stretch, but usually it's not my personal favorite. And even if it was within the healthcare sector right now, you guys know how rocky maybe this area has been and how undecided it really feels, at least for me right now. So I'm continuing to take, a lot of caution. I am open to individual components on either side of things, bullish or bearish, but I'm very picky right now, even by my standards, not really liking this as an area to trade right now. I want it to figure itself out, and right now, at least to my eyes, it seems like it doesn't have a darn clue what it wants to do with itself in the relatively short term. So I'm not going to try to be the guy that's smart enough to figure out which way it's going to win. I'll wait till we get some clear signals and a little bit of clarity within the sector as a whole. Over in discretionary, we're knocking on the door of that all-time high. It has been a very strong run in discretionary. I continue to like it. Now, I absolutely expect it to pull back off of this resistance. We'll see if that's the way it goes. But certainly I expect this approximately 118 where we're hanging out right now to be a challenge. If we just blow right through this tomorrow, because, hey, we've got a lot of momentum. We are extended, at least to my eyes. I'll call it a bullish signal. I'm still very interested. I'd really like a pullback, whether it's 3 days from now, whether we break out and run for a week and then get a pullback, start that pullback tomorrow. I think a pullback within the discretionary sector is something I'll be very interested in, probably neck and neck with tech, as far as, potential pullback sectors right now. Been very strong. Not a whole lot to say that we haven't talked about a lot before. We are seeing, and we saw this last week, some of those, more brick and mortar type of retails that have really struggled all year long, starting to at least show some signs of life, breaking back above their 50-day moving averages and things of that nature. While maybe they're not great looking charts in the sense that I want to run out and buy them, those are, some potential turnaround signals. And if they're kind of pulling their weight, that's just going to help the sector as a whole. I still really do like this sector. I do expect this to be a challenge. Whether it will be, we will have to wait and see, of course. And hey, Abel, good to see you, my friend. Really a pullback, even back all the way down into, 114.50, 115 range would be fine. with me if that's the way it wanted to go. I'd almost prefer it at this point, but if we continue to run, so be it. A break of this resistance, I will absolutely call another bullish signal, because how do you not, right? How do you not? Very strong sector, in my opinion, right now. I know I probably like it and have liked it a little bit more than a lot of other people lately. So it's nice that it's been pretty well behaved in its travels. Over in real estate, just another day working into the 9 EMA, catching our footing and rallying off of the low. It seems like, we've seen that happen, basically for a week straight, almost, where we work into that 9 EMA on the intraday, it catches us and we spring back up. And now this is the fourth day in a row. We've not closed below that 9 EMA since our, confirmation on the retracement, back in March. I wish I had anything super intelligent to say, but I certainly would expect at some point we might need a little bit of a pullback. But overall, I mean, this continues to show a lot of strength. Hard to really say anything negative about that sector, when the worst thing you can say is it pulls back, it sells off on the intraday and then rallies off of it. And I mean, there's really not much all that exciting to say about it by any means. So just another day in the real estate sector. If you'll look here really carefully, you can start to see a 200 period moving average develop here on XLC. We've finally been around a long enough time to start putting together a 200-day moving average, which is always nice to see. Not a lot of movement here today in the sector. Really, we continue to see some weird, behavior in the video games, EA and Take-Two, not necessarily setting the world on fire, but you did see EA, after a lot of selling early, work back into that previous swing low and really. So you're still seeing some of that behavior that we've seen in a lot of the components in this sector as of late. They just don't seem. They seem to ultimately get the job done, but the way they do it compared to tech, compared to basic materials, compared to staples or discretionary, has just not been as nice, in my opinion. And that really has not changed all that much. Beyond that, we know our support level is down here. I do think we can kind of look at this old resistance zone at that just north of 47.75 is kind of a first line in the sand from a support point of view. Little bit of room between now and our next level of resistance. Still, again, doesn't make me right. Doesn't, time will tell if it makes me right or wrong or look like a genius or a fool, but I still prefer almost all of the other bullish sectors to this right now. And that really has not changed. And I don't know what I need to see before that does change. I guess hopefully I will know it when I see it. You do have Facebook looking to test that old resistance as some support. So certainly, as we all know, Facebook, Google, big players within this ETF. So we'll see where this one takes us. I still prefer the Ciscos, the Microsofts, the Intuits, the Intels, that space, the technology space, to the communication services space right now, for better or worse. Just doesn't feel like it's as behaved as, at least in my head, it should be. So not a lot changed here today from a purely technical point of view. Utility still kind of trying to figure out, is this a pullback, a sideways move? What exactly is it? Real estate just continuing to do what it does. We have, fairly extended, in some of these sectors. Tech looks extended, materials, your discretionary. So some areas are looking a little bit extended, but we have a little bit of room before we're, knocking on the door of major resistance in pretty much everything except the Dow right now. So it'll be an interesting week. There is no doubt about that. And we'll end it with some big name earnings, getting ready to jump right into earnings season. Over in the VIX, had a little spike early in the day on that gap. Ultimately, not a whole lot to see here, I don't think, but at this point in time. But certainly there was a little bit, I think it was 7%, which isn't huge, but, it's something, 7%, really right after today's open. So there's a little bit of increased volatility here. So exactly, Whitney, a good way to put it. So, and if you do this, if you're a trader, that is definitely true. Sometimes you're like, wow, that guy is good. He knows what he's talking about. Other times you're like, oh my gosh, did I just waste any amount of time listening to that guy blither on. I've been on both sides. So over in gold, it continues to be an area I think we should shy away from. We were able to break 13, this old resistance zone, but we really came off of it pretty strongly today. I continue to contend that this isn't a great swing trading environment. But if you are not of that school of thought, I think this break above 13, if we can kind of get some confirmation, you can kind of see after a nice burst through that 13, we really sold off quickly on this hourly chart, but we have continued to hold with above that old breakout point. And it's not so much 13, it's just that we do have some history here. If that is to hold, I guess I could see the case for wanting to trade into gold. I still want nothing to do with it. I'm still calling it sideways and waiting to come get some clarity. Probably not this month, but you never know how it will play out. I still don't think this is a great swing trading environment. Not necessarily a terrible cash flow environment, but I don't really like this as a directional trade. That has not changed at all. 1280, a break below that, definitely a sell signal for me. 1325, still the level of resistance I need to see it break before I start to get interested from a bullish point of view. Volatility is still there. It's it's not for the weak of heart right now. We're seeing some crazy movement, wherever you might find yourself in gold. Whether you're trading it, watching it, whatever it might be. Certainly some movement in that in gold right now. Over in silver, holding up above, 15, which is the real big one as far as I'm concerned. That 15 is a major level of support. Break below that, as we've talked many times, would definitely call that a bearish signal. Nice movement here today. We've got stuff to deal with. We've got this, 15 and a quarter, this old, support level. I know it's not exactly 15 and a quarter, but right about where we are right now. Falling 20-day moving average. If we can break through that, I guess you could call it a bullish signal. I wouldn't call it a tradable bullish signal, but I could understand at least a little bit why somebody would call it a signal. Right now, even more so than gold, this is a stay away chart for me right now. Not too interested. A break below 15 could be an interesting development. I guess a break back above, 1560 or so, the 50-day moving average, this resistance zone that we, put up on the intraday. Maybe that could get me to change my mind from a bullish point of view. I don't expect that to be the case, but you never know. We'll see if that one happens as we get going. It continues to fight, and I think the big story, honestly, for me on silver is it continues to fight for 15, and I think it should. I mean, that if we break that 15, I don't know the future, sadly, but I mean, there is, that's, to me, a pretty big break. We've, looking at a weekly time frame in that scenario, we would have made lower highs and lower lows, failing at least, at first glance, at least, will be looking like it's failing this double bottom that we set up last year. So 15 is a big fight in my mind for silver. Over natural gas, just going to make our life a little interesting. I did see a little bit of movement here today off of the open. We still are below this old trading range, and so for me at least, I need to get above that. But if we were to get above and back into this old trading range, other than resistance, we would have taken out kind of everything, right? The price action, at this support zone around 275, all of these moving averages would be broken through, putting us right back into that trading range. If we can do that, I'm going to put it right back into that trading range. And I'm still very interested in a potential break to the upside here at the 290 or thereabouts range. Still think that's the signal that I want to see more than anything else. Whether or not I'll get it, only time will tell. We haven't tested this resistance level. I would expect that to be a little bit of a challenge. There's a lot to hold it down right there, right? The 50, the 20, the old price action. So that should be a little bit of a battle for it. If it can push through that, I'm going to put it back into this range and expect it to try to work its way up. That's still a lot. I'm not there yet. If we see some good signals, again, I'm not interested because I don't feel there's enough room. But if we see some good signals develop, sell signals for the next couple of days, if I had to do something, that's the side I'd bet on right now. If you said, Frank, you've got to make a call, I would say I'm going to bet that it can't break above that resistance. Luckily, can't say that. So if we do see some signals, maybe there could be some bearish opportunities a little later in the week. I'm not interested, just too much stuff. Now beyond that, we have, the little floor that we put together last week. So still not in my opinion, good bearish environment for swing trading. For intraday trading, of course, all bets are off. There's lots of opportunities on both sides in natural gas. If we can get back above this, though, that's going to be a nice step, on its way to maybe trying to break above that resistance level. So we'll see where this one goes. I still feel that the best signal is not going to happen this week. If it ever happens, I think it's the break of this resistance at around 290. I still feel that that is the best signal from a trading perspective. And lastly, over in crude, another good day, working above 64. We're now working into that $64 to $65, range of old support and resistance. We are a bit extended. I would expect this to be a little bit of a challenge, but goodness gracious, betting against crude, I'm not betting against it. I'm not going to go bearish by any means, but, even saying, hey, it's going to pull back seems to be a losing proposition these days. Not really a whole lot to say other than great movement. Now, just like when we worked into that 200-day moving average last week, I do think this is where we need to start thinking about, from a bullish point of view, what are we doing with our positions if we have them, locking in profits, pulling up stops, scaling out. I do feel that this is an area where this conversation should happen in our heads. Whatever we decide to do is, of course, we're all going to decide different things probably, but I do feel that this is one of those zones where if we see 3 days of selling in a row, we shouldn't say, well, we didn't see that one coming. There is a lot of history in this general vicinity, the 64, 65 range. Doesn't mean it can't beat it. It's been taking out all sorts of stuff along the way, right? So there's still, no reason to think that it has to go bearish tomorrow by any means. But I do feel that we are at an area where we probably need to be thinking about managing existing, trades within this space, whether it's like scaling out, trailing stops, and what the heck, let's let it roll. It's strong. Let's roll with it. Perfectly legitimate. I just want it to be my choice and your choice. I don't want it to be afraid to make the wrong choice, right? Have to be willing to make a choice one way or the other. Once we're beyond this, let's go ahead and sneak into a weekly chart now that we're challenging some different areas. This is a pretty big, zone in my opinion, but we're seeing some pretty good things if we look at it on a weekly time frame. We have broken above the weekly 50-day or 50-week moving average. The weekly 50-day, that doesn't make any sense. A weekly 50-period moving average, that does make more sense, which I do consider a bullish signal. We do have some history here, right? And this is kind of, an area rather than a number that I do think we need to keep an eye on. If and when we continue through this, there is room to go. There is still room to the upside in crude, and so it continues to be an area I think that we are probably going to continue to like as long as we continue to hold. I don't know where exactly I'm going to lock up support. I still, 60 is, 60 or just north of 60, this little consolidation zone that we saw a few weeks ago jumps out to me as probably where the real line in the sand is. But we have lots to prop us up. We have, and we talked about it a little bit last week, we have the rising 9, we have the 200-period moving average, we have the 20, which is, going to keep creeping up, right? Up and up and up. We have that 60. There's lots to hold this up in the event that we will eventually have some sort of a pullback. When is the question? Lots to prop it up. So good movement here today. I've never had a swing trade. I'm way too scared to have a swing directional. I've only done things from an intraday when I was sitting there babysitting Marie on futures. So, and I don't use trailing stops personally unless I'm literally away. So I never tried. I don't have a great answer for you because I've never tried to do that. I would never dare. So hold a swing trade. I tend to go into more into the ETFs or look at it from an intraday perspective. And I personally don't like the trailing stop methodology because it violates my number one rule when it comes to stop losses, and it has to be below something that makes sense. And the trailing stops, to my mind, and not to say there's anything wrong with using them, but to my mind, they violate my rule. I want it to be below the 9 EMA. Well, it can trail up while I'm gone and then, work, and I don't like that at all. I'm much more of I tend to look into those spaces because again, it's a lot about comfort. I wouldn't feel comfortable holding a swing trade. Again, I wish I would have. I've been feeling pretty good. I've been sleeping really nicely this last week or so. But generally, I tend to look to the ETFs for the swing trades in the futures myself, just because, again, a lot of it's about comfort. And if I'm not going to be comfortable, what's the point? So, yeah, good problems to have, right? Keep an eye on this. This is an area, again, this was a big breakdown zone. Right. So yeah, there you go. So yeah, a little bit different on the naked put. I'd be willing to sit through a pullback, generally speaking, on a naked put. Again, that doesn't make me right or wrong, Marie. Sometimes it makes me right. Sometimes it makes me wrong. So from a price perspective, though, big breakdown here. This was this area was very important not all that long ago. Big bounce, fall, and just plummet. So I do think we need to respect this zone from a price action perspective. So yeah, and I understand, I'll never knock you for that. So I think probably it depends on what your strike is and all of that fun stuff. So yeah, I mean, and that's really, I guess for me, it's, what's going to, where's that line in the sand? And this one has a lot of them, right? Where do we want it? Whether it's trailing an ATR. And just because I don't like it doesn't mean there's anything wrong with it by any stretch of the imagination. Lots of different levels of support depending on, as we have that debate, well, I want to give it a little room, but I also want to lock in profits. We'll all come to different conclusions on what exactly that means, right? That is how this stuff works. So there we are, ladies and gentlemen, after a fairly dull day, overall in the market, not particularly crazy. We did see some resiliency. No doubt about it. Saw some nice movement off of the retracement in the staples, so you can't really complain about that. Some of these strong sectors holding their own that are very, have had great runs. Discretionary, tech, materials, industrials too, have had just such great runs, and perfectly sensible to see them pull back. And what are they doing? They're kind of doing that little consolidation inch up. And so we continue to see, quite a bit of resiliency within the market. We're not too far away from testing some real resistance. So it should be interesting as we get into, of course, earnings season it's about here. It's close enough to say it's time to, it's earnings season as far as I'm concerned, even though probably doesn't officially kick off till maybe next week. So do be double checking those, everything you're doing for the earnings. It's your business, whether you're looking to, hold or get out before earnings. Just all I ask is that you're aware, so you're not, hey, surprise, what happened here? So make sure you are double checking. I'm sure you guys all are, but just in case you're not, double check. We'll be getting lots of earnings, here starting next week. So we're going to have lots and lots of earnings to discuss together as we get going. So awesome work, Marie. Well, ladies and gentlemen, that will do the market recap today. But as always, it is great to see you, and I certainly appreciate everybody's time. It's a lot more fun to do this with you guys than on my own. Not even a single technological issue. I was a little bit worried because my computer was being real grouchy at between 2 and 2:30. So I was crossing my fingers, but we made it through. So I will take it as a win. If you are new around here, be sure to subscribe to the channel and hit that notification bell. You can, of course, are welcome to join us over on Twitter as well at Tackle Trading, and me at Frank Martin 23 if you're ever looking for me. Thank you guys all so much. If you enjoyed the recap, it is helpful and appreciated if you give it a thumbs up. Just to let us know that we're on the right track. So thank you in advance for that. So with that, exactly, Marie. Yeah, fingers crossed. I'm going to get out of here before that happens. So, all right, guys. Well, I thank you so much for your time. I will see you guys same time and channel here tomorrow afternoon. Guys, have a great Monday evening, and I'll see you tomorrow. Bye, everyone.